All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for all of you being here with us this evening as we take a look at the technicals and the fundamentals in the Forex market to see what we can take advantage of. So, as always, let's make sure we turn off any and all distractions. Grab a pen and paper, take plenty of notes, everybody, and let's make sure that we participate and engage. Don't be afraid to ask questions. So, with that being said, as always, drop me a one in the chat if you're all set. Let me know you can hear me loud and clear, and we can get this session on its way. All right. Appreciate all of you being here. Oh, so let me make sure that everybody has control over their microphone. Okay. All right. And we are all set to go. Let me get off this screen and let's go over and take a look at the Forex calendar first and foremost today. So Tuesday the 15th, we had the Empire State Manufacturing come out, and we can see that it missed forecast. So for those of you who may not know what it is, first of all, actual, a greater number, right? Greater than forecast is good for the currency, right? So we came through, you see where it was. Forecast was 6.1, it came through at 4.5. So it's a leading indicator of economic health. Businesses react quickly to market conditions, and changes in their sentiment can be an early signal of future economic activity, right? So you can see where that came in at over. It was negative 6.1 was the forecast. We see where it was. We see that the PPI, though, missed, right? So let's read about what the PPI is. Actual greater than forecast is good for the currency. It's a leading indicator of consumer inflation. Okay, and we know that that big I word is floating around globally. When the producers charge more for goods and services, the higher costs are usually passed to the consumer. Okay, so we saw the CPI came out. Now we see the PPI has cooled off a bit, missed target. All right, so a little bit of a mix there. So we'll continue to all eyes on the Fed for December, right? But we still, okay, we heard forget which Federal Reserve member it was that said, hey, telling the market don't get too far ahead of itself, right? There's still a lot of work to do in regards to inflation, and we can see that there's been some optimism in the stock market rally. But I am still bullish the dollar. I know it's correcting right now, but being that we need a consecutive set of data for the Feds to really put a pause on everything. So we may not get 75 basis points in December, maybe it's 50 basis points, but it's still a rate hike nonetheless, and inflation is still a challenge that needs to be brought under control. But there are some signs of it cooling, which is why we see the stock market and everything rallying right now. And then we see here that the wage price index. Good evening, David. We see that the wage price index came in a little bit hot. So let's read what that is, right? So actual, again, greater than forecast is good for the currency, released about 45 days after the quarter ends, right? It's the leading business indicator for consumer inflation. So again, inflation, right? When businesses pay more for labor, the higher costs are usually passed on to the consumer, okay? Consumer. So we saw that the wage growth ticked up a little bit, but it's still within their range. I was reading an article, matter of fact, I have it here, and I'll share it with you guys. So it ticked up a little bit, and you can see just right here, they don't want to get caught in a price wage spiral, meaning when typically if you have, I think technical definitions like 3 out of 4 quarters where you have, rising, accelerated wages and consumer prices, right? They call it a spiral because it's just one's effect continuously affecting the other. But you can see here what the RBA doesn't want to see is a wage running north of 3.5% to 3.75%, because then you've got to engineer an increase in unemployment to drop the rate of wage growth. So, they're not quite there yet. So, and they believe here you can see in the current environment of rapid price gains, the level of wage growth is still relatively contained, right? You want to watch those keywords compared with other economies from Washington to Wellington. The Reserve Bank has also said wage increases remain consistent with a return of inflation to its 2 to 3% target from a forecast peak of 8% this year. Okay, so it came in, right? It's an increase, but it's still well within their range. So when you start thinking about that when it comes to monetary policy, when they're talking about, hey, there's still a need to raise rates, but maybe not as aggressive, smaller, more frequent hikes, and then eventually a pause. So this kind of falls in line with what they have planned. So there's nothing super alarming because it's still within the target range that they were looking for. So I am going to actually share this article because I'm just skimming over it for everybody in the chat to check out, because it's very important to understand what's going on globally and what the thought process is. All right, so that article is there. I am also going to, I don't know, do all of you, drop me a one, do all of you take a look at the newsletter that we send out? Sometimes I know people don't have time, but drop me a one in the chat, do we? Yeah. Okay. Yeah, because sometimes at the end we throw some things in there for you guys to take a look at. And this week we put in, well, you've had that for the last couple of weeks. So if you just click that link, it'll give you the guide, right, for the Ichimoku, what we covered a long time ago inside of the trade room on a Saturday. All right, so there's all the slides there, step by step, what it looks like, how it all comes together. So there's a lot there to unpack, right? Some good visuals. And then this recovery off the drawdown, right? Kind of just giving you that reminder of the importance of trade management, risk management, okay? So you can see something here where if you have 50% drawdown, right? Not using proper risk management, you draw down 50%, you actually have to gain back 100% just to break even, to recover. So just some things that are stark reminders of how important risk management is. So I will put this in the chat just in case some of you may not have had a chance to take a look at it. Here you go. It's all right, Kim, it's okay. It's always there for you, but I know sometimes the reason why I wanted to put it back on the table is because sometimes it gets pushed down through the chat, right? So some people may not even see that it's there. All right, so that's that. So what do we have coming in on Wednesday? CPI data for Canada. You got CPI data at 2 a.m. on the pound. Okay, so we want to keep an eye on that. We're looking at pound pairs. You got CPI that can cause some volatility, and that's going to happen early. CAD, CPI, okay, and you got core retail sales coming through for the United States, and then you got some monetary policy hearings coming through for the UK. So it is a busy day tomorrow, right? So don't be surprised if you see the volatility. Okay, if you see the volatility, if you're swing trading on your higher time frames, typically you can just absorb it. But this is a time tomorrow where if you're scalping, you want to be aware that these things are going on and kind of wait for the dust to settle. And then at 7:30, you got the employment numbers coming through for Australia. So it is from starting at 2 a.m. Eastern Standard Time all the way through. There's going to be a lot going on tomorrow. So just manage your trades accordingly, or stay out of the market if you're not involved in anything. And you're worried about it, it's always best, right? No trade is a position. Okay, so just always remember that and be cautious. So I want to get over to trading economics. That's the Australia news there that came out. If you want to check that out, we see here that the U.S. producer inflation is lower than forecast. So that was that PPI that fell in line with the CPI and kind of cooling off a little bit. So that's still holding front page here, and then we see that oil regain some traction today. So it's just continuing to bounce back and forth. And then we see here that U.S. futures ease ahead of retail sales data. They're just letting you know market's paused and everybody's waiting on that data. So that's that there. Dollar index, right? It's dancing around that 382 level on the daily. The stochastic is in the buy zone and it's up against a daily support level in that area too. Okay, in that area too. So That's very, very important. 80-20, boom, broke down to the 382. So if we traded the dollar index, that would have been another successful 80-20 play right there. Okay, but we just monitor it to look at the price action on the dollar compared to the other major currencies. So that's that, right? Which that should tell you a little bit about the euro too, right? So if you flip this upside down, then you would be looking pretty much at the euro USD and a similar type of price action. But we'll take a look at that in a second. So what I want to do is, because the dollar index is sitting at this level, I'll start off tonight. First, let me ask any questions on the fundamentals before I jump into the charts and potential opportunities.
Can you briefly tell me what you were just saying about the PPI and what that represents? I know you said it was lower than.
Yeah, it cooled down. It cooled down. So when you look at the CPI, right, for the US that came out, okay, that's your consumer price index looking at consumer prices, okay? Then your PPI comes through, and that's your producer price index, right? The cost of production. Because we know if that continues to go up, that cost is usually passed on to the consumer, right? So it's just like at the university, right? Tuition, any incurred cost, it usually leads to a tuition rate increase, right? So that's what happens. So it cooled down a little bit, and so the market is keeping an eye on that because they're looking for any sign that the Fed may start to pivot or back off their aggressive rate hikes.
Thank you. That was
You're
helpful.
welcome. You're welcome. You're welcome. Right? We're gonna pass that cost on to the consumer, and as things are gonna just continue to heat up. So that cooled off a little bit. That's a good sign for the market. You see the stock. They look for any little thing that they can to rally, right? To stay aggressive in what they're doing and to get into riskier asset opportunities. So that's what you're seeing the market, kind of having that little rally that it's doing, but still work to do. Still work to do. Long way to go. So let's go over and take a look at. So I want to take a look at this UJ, right? And we're sitting here on the 4, right at an 80-20 on the 4-hour, just coming off this leg, right? So just coming off this leg, potential pullback. So I just took it right off that impulse move. And the reason why I did that is because we know when the DXY is correcting, we know that the dollar, right? I mean, the DXY is correct. We know that the UJ, right, corrected 80-20, boom. And you see the level that it's sitting at. You see our stochastic is in the buy zone, right? That just means, hey, we had a lot of momentum to the downside. Now we're looking at opportunity where price may reverse. Okay, so what you never know, okay, we need to keep a close eye on the fundamentals, is the correction over, and this is going to form a base, right? Form a low, form a new level of support, and then continue to get long. Or is this just going to be a temporary move, right? Temporary correction after the impulse, and then down, right, for a deeper move. Okay, there's always some unknowns in the market, but we know that this is corrected quite a ways. This is a daily fib that we're looking at here. So again, beautiful 80-20, boom, straight down around that 382 area, jet pretty much at the 50% level, and it's starting to stall a little bit. Okay, it's starting to stall a little bit. So if we come down and we take a look at the 4, that's why I'm looking at this, because that's that impulse move, moving to the downside, and then we've got this pause right here in this zone. Okay, so even if, like we drew up on a daily, even if it's just a temporary correction and we're going to get a further move down, if we get back above this 140 level, then that's a tradable opportunity there. Okay, that's a tradable opportunity. Or, you wait. If you think, hey, I think more downside on the dollar, more downside pressure is to come, then you wait for a high price right up in your zone, and then you look to get short. But that's where we are. That's where we are on this UJ. So we know when it's in the zone, we're going to call it. Okay, then you have to make the decision on how you want to play it. Any questions on the UJ?
Bennett, just a quick one.
Sure.
Referencing what you just said about the price possibly breaking the 140 level. When it breaks to that level, does it falls into the 80-20 play?
Does it say that one more time? Does it do what?
If it falls above the 140,341 level, do we still consider that as an 80-20 play?
Right. If it breaks back above 140.34.
Yeah.
Yep. Because right here now, right, this is your play right here. You see it? Look, it's a great question. We've got an AB boundary. You see a shallow retracement, and then you see how it broke it. You see it. This is what constitutes the 80-20 opportunity here. See how it fell down into this zone? Right?
Yeah.
So that's your 80-20. That's your 80-20. Now it's just a matter of if it wants to react, right? If it wants to react at this zone. Okay. So you could do, some people enter at the zone, like, right? Some people are in it now off of buy limits. Okay. If they picked up on it and they saw it, right? Maybe they have a buy limit set here in the zone. When I buy limit, I usually just put it right in the middle of that zone. So some people may be in it now. Some people are waiting for further confirmation. So maybe they get down to, their 1 hour, right? You can see it shaping up here too on the 1, right? So it's kind of same type of price action. So now maybe people are drawing a trend line, right? That's the simplest way. Okay? That's the simplest way, is to draw your trend line. Okay. And technically it's like that because that's your lowest point. So now you could say, number 1, I know what my direction has been. Number 2, I've identified my zone. Now 3, how do I want to enter it? Right? How do I want to enter it? So do I want to enter it aggressively now? Right? And you could do that and you could say, you know what? I'm going to play this. I'm going to put my stop below this low here. Boom. Okay. I'll put my stop right below that low. That's the low. Okay. I'm going to play it aggressively like that. Got a bullish candlestick that closed on my trend, backside of my trend line. I'm going to get long now. Okay. So if I entered off this trade, boom, there's my stop, right? It's a large stop, 200 pips, it's a big mover, okay? But my upside, say for example, on this 1, we just look at it from this 1 hour, okay? My upside back to that 382 is 480, okay? Or you could look at it like that, or you could say like this. I'm gonna let this drive up, okay? So once you identify it, now it's time to just work the scenarios out in your head, okay? Based on how your trade plan. So now you can say, well, I want this to push up, right? Get me above 140.34 and then check back, okay? Because then I can start dropping fibs and everything else on it, right? Maybe it checks back to a zone and then I can look. If you don't want to use the fib, you say, hey, simple, right? I just want, okay, a break of 140 and a retest of 140. If I get a retest of 140, I get me a swing low to form there, then I can even put me another trend line on it like this, right? Give me a retest of 140 and a trend line break, and I'm in this bad boy. Okay. 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 So the fibs will take you this far into your zone. The rest of it, you got to develop into a powerhouse trader. All right. And that's what the inner circle is about. It's helping you to develop that, right? Past resistance becoming future support at 140. Now, that's what you can wait on, right? You see how that's pushing up. So even if you enter aggressively off of something like this, at some point, right, you have to know I should expect some type of check back, some type of pullback. So I can't be scared when I float out a profit. Or what you do is, okay, you just set you up a 2-to-1 out the gate. Like, you know what? I'm gonna set myself up on a 2-to-1. Okay, like this. Or 1 to 1.5. However you play it, whatever you had a patience for. So if this here, okay, if I'm in aggressively, here, I'm in this trade there, okay? Then if I'm in this at a 2-to-1, what we say this was like 200 pips or something, a 200 pip move, let's call it 200, then I'm looking for 400, right? Okay, or 1.5 times that, All right. Something that puts you in a positive ratio. Okay. So let me, what is that, back up to resistance pretty much, 377, 380, 380, 400, somewhere around there, right? Like that. And you can say, this is my swing. Okay. This is my swing trade setup. Boom. Something like that. Like so. Okay. Right. That could be a setup. Right. That's not even to a 382. You can always get in these setups and say, you know what? My stop is 30 pips. I'm gonna go for a 2 to 160 pips. The 382 might be 130 pips away. Maybe you don't want to go all the way to that 382. That doesn't matter. The key is identifying the potential for the reversal. That's what we trade primarily, are reversals, right? So just keep it simple and get in the habit of doing this over and over and over again. Over and over again. 100 trades. I'm looking for my 80-20s. And if I get what I'm looking for, maybe you use the trend line, maybe you use the cloud, and you put your stop below the cloud. Simplest way is to draw a trend line. And if it hits my zone and it gives me the break that I'm looking for, if I'm aggressive, can I get a bullish candlestick to close? Preferably like a bullish engulfing candlestick. Like you see how it took this high out right here? All right. Does that mean you're gonna win them all? No, nobody does in trading. But if you consistently over time find the setup in your zone, and you take the same approach, right, till it's just boring, right? You want to make boring money, right? Exciting money, that's how you lose hair and all types of stuff. So now, if you could just set yourself up and do this over and over and over again, right? This is where you come out on top, right? This is how you do it. That's setup, and you let it run and see if it can get to your target. Now, when you get to a 1-to-1. Right, you might say, you know what? I'm in a 1-to-1. Let me see this. Control C, B. Okay. You might say, all right, I'm at a 1-to-1 now. Okay. Like that. I'm at a 1-to-1. I'm gonna take half of my trade off. So if I'm in here at, 2 micros, 20 cents, 40 cents, right? Say I'm in there at 40 cents here at this target level. At this target level here, boom. I'm taking half the trade. So if I'm in here at say 40 cents, right? So when I get to 200, right, I made 40 bucks, right? Because if I get to $200, I'm gonna take half the trade. I'm gonna take half that trade off. So I'm gonna take 20 cents off, 20 micros off. I'm going to close out 20 micros. So that means I've locked in 40 bucks at that point. Boom, $40. $40, like that. Okay. I still got half my trade in, but you know what I'm gonna do? Now I enter here. I'm gonna move this stop here. Boom. I'm at break even. So the remaining 20 cents that's in the trade that's still active, I can't lose any money on it. The worst I could do is break even because I just moved my stop to break even. Okay. I just moved my stop to break even. Now I'm gonna just let that go, right? To see if it can get to the target. Right? Now I'm gonna let the rest of that just float. Can I get to the target? Okay. And when it moves up a little more, okay, you know what I'm gonna do? I'll move the stop in the profit. Like so. So now if it comes back on me, bang, I made money on that too. Right? And if it doesn't, then you know what? It just ran. Okay. It just went ahead and made its way to that final TP level that I was looking for. Bang. All right. But I've taken 40 bucks off the table now. Boom. It's added to my account. Move stop to break even. What's remaining? I can't lose money. I can make money. Okay. And that's how you can manage that trade when you're playing, okay, those longer swings. All right. Now, when you see this happening too, that might be, hey, I'm out the game. But if this U-turns here, then we know that has, right, greater upside potential. If this wanted to swing and move, okay, if this wanted to go to a C to D push zone, then hey, we just took 400 pips, but right, the higher time frame, if it keeps moving, that's 1,600 pips to the upside. So that's 1,600 pips of upside potential if it wants to U-turn. We don't know that yet. Right? We don't know if it's ready, right, to do that. Okay, we see where the dollar is on the index. That's all we know is the dollar's testing the level right now. It's bouncing around. Okay. So that's how you can play these swings. But these fibs just help you to identify, right, your possible sweet spots and your U-turn points. That's what we mean by that. Okay. So I'm in an 80-20 zone now. We know price likes to react there. Okay. So how am I going to design my trade plan? Okay. You can see this is already moving up, right, on the 5. So I know from my 4, I'm already in my 80-20 zone. That's all this is right here. You're looking at that reversal. So on buy side. So on your lower time frame, you might already be in that. All right. Look at the swing. All right. So this is what's being reflected on the lower time frame. So maybe this moves down and moves up as it makes this pathway. Just like that. Okay. That's what you're seeing. What we just saw on the 5 is what you see right here. Okay, you just zoomed in on it. Okay? The wave within the wave. All right, we just zoomed in on it. That's what's going on. Okay, great question. Any other questions on that?
No, sir.
Ryan, what's going on, man?
What's the deal, bro? You all right?
Doing good. Doing good.
Good, man.
Yeah.
No questions
You
on
doing
that.
good?
Yes,
All
sir. I am good, man. I'm
Awesome.
good.
Awesome. Okay. So let me back this up, right? So we did that with one position. Another thing you can do it if your broker allows you, right? We talk about that all the time, depending on your broker. Is you just launch 2 positions. So if I was in at 4 micros, 40 cent, right here at my entry, I launched 2 positions at 20. Same stop loss, but you're gonna set your targets different, right? So on my 1 entry at 20 cent, I'm gonna set it at target 1 here, 141.76. And then on my second entry, in this example, I'm going to set it at the maximum level where I want to take profit there. So now, once they both reach 141.76, one's going to take profit, the other one's going to keep running. And the one that keeps running, you just move your stop loss to break even. Okay. Different ways you can manage the trade there. Okay. All right. All right, so here we go. That's that. Another one, right? I'm keeping my eye on just because of where that dollar is this one. All right, so we had the head and shoulders that fell, came back. It's just kind of ranging is what it looks like. But we're right back at that level. So if this is going to be some sort of a range, maybe we're in a situation where it's ready to go from bottom back to top if it forms a low. Okay, so it could take a while. Right, but that's where we are, kind of. Right. Okay, kind of sitting, hovering in the zone. So we pay attention to that. So we recognize, like, all right, well, we thought it was a trend that was ready to go from the C to D. It got rejected. So maybe we're range bound. We're right back at that level. We got to pay attention to that. So if I'm looking at this, okay, to the downside, if I'm at this level and I'm thinking, all right, well, we've moved down. For one, you got another 80-20 scenario there. That's additional confirmation. Okay. But even if we cleared this out, we can see clearly that we're back at that same level. That's why we do top-down analysis. Everybody see that? Right? So this is This is why we do it. We bring our levels down because kind of just like the Ichimoku cloud, it allows you to see all your time frames at a glance, right? One look, okay? That's what's so special about the cloud. Allows you to see everything, one look. So it's the same type of concept when you bring your levels down through the time frames, because I know I'm sitting at a weekly level, right? In between two weekly levels. I know from the daily time frame where my fib is, look, I'm revisiting. So this is in essence a potential double bottom that's trying to find a low. My stochastic is way oversold, okay? Crazy impulsive move. So if I just kept this chart right here just naked with just support and resistance, I could just start dropping trend lines, right? Like so. Bang, right? And you know you could leave it there, because if you wanted to be aggressive with it, you could bring it down, but you want to try to bring your trend line down through the lowest point, but that's kind of consolidating, right? So what you do is you just bring it to the outside of that consolidation like that. Okay? But what you really need, right, is this just clear, is we need what? Somebody tell me. We need price to do what? It's trapped in between these two weekly levels. What do we need?
Breakout.
Absolutely. Absolutely. Thank you. So you need a breakout, right? So regardless of whether you had this trend line here, you needed this aggressive trend line, you needed to break out of this range. Okay. So what do we need to happen? We need to see, if it's gonna make the move, we need to see higher highs and higher lows coming out of there. We needed to break out at the top of the range, and oftentimes it likes to come back to retest the range. Okay. Boom. Right. Or it's going to break down, okay, and it's just going to continue lower. But that's the beauty of having your charts set up. This is what we mean by letting the trades come to you. Everything is set up. You did your homework over the weekend, your charts are set up. Okay, these are the potential opportunities. I need these things to play out. I'm not jumping on my chart the day of, right? I'm just leaving it. I'm prepared. Okay, I'm prepared, waiting to see what's going to happen. So that's another setup. Okay. Any questions on the dollar Swiss? Yep, you need a catalyst. No sense in guessing. It is what it is.
Yeah, so just to clarify, so you're basically waiting for the break of the trend or support for your entry.
Correct.
Nice.
Correct. Mm-hmm.
Thank you.
You're welcome. Right, because these, from our top-down analysis, these are weekly levels, right? So always when you see one of my charts, Ryan's charts, your monthly is going to be in black, your weekly in blue, your daily in red. My 4 hour typically I do in purple if I have them on my charts, and then my 1 hour in orange, right? So these are 2 weekly levels, and that's just clean. I need price to do something. And sometimes we can stare at our chart so much that we just start seeing stuff. It is what it is. All right, this is trapped. Wait for it to break out. Let the market tell you what it wants to do. All right, no sense in guessing. No sense in guessing, especially during these times. All right, so just let it ride. Let it ride. You got time. All right, even if we're playing from level to level, right, between this top weekly level and this daily resistance level here, right? You got time. You got room there, right, for it to make a move. Okay. Same thing down here, right? We got time, over 100 pips there. Okay. So that's the dollar Swiss. Just let it do its dance. See where you come out. Okay. Then we've got the UCAD. Okay. Same thing. Isn't that amazing? Right? Look at the dollar index. Look at the dollar crosses. Okay. This is where we are on the daily. Price turned over. Boom. Sitting here at a 50%. Okay. Coming into some prior structure here. Don't know if we're going to get that balance yet, but you can see your stochastic in regards to, right? And this is just extra confirmation, not to be all the end all, but you can see you may have some things starting to line up. Again, we need that catalyst, right? So if you come down and you look through the charts, like, yeah, this is the turnover. This is where price has turned over. So what you could do again, you could take all of this stuff off. You know where you are from the daily. If all of this stuff confuses you, just take it off. All right, so this is my 4. Boom. Just like that. Okay. That's where we are. It's trying to make his mind up what it wants to do. So let it. Okay. There's the vaunted 135 level that a lot of traders were focused on. It finally came down, broke through it. Okay. Maybe it wants to go back and retest that 135. All right. Don't know. Right. Okay. Depends on how long. Same thing here on the 1. Right. Yep. We see what's going on. But look. Okay. Pull these 4 hours down. Same thing. Right? And give yourself time enough to discover what time frames do I like to trade on. You know, coming from the top down, what time frame would I like to enter on? You know, make that a part of your trade plan. See, look. That's it. It's where we are. Yeah. We break the zone, probably gonna head down. Okay. Probably gonna head down.
Benny, just a quick one.
Yes, sir.
Is it possible to draw another trend line in between where the price is and the inner trend line, or that would be too aggressive?
I would say it's too aggressive, right? Because it's moving sideways, you know. See how that's moving sideways and it's choppy?
Yeah.
You know, as a matter of fact, this now is your lowest point in the trend right here. Okay, so if you drew that, right, that technically is your lowest point, and it pushed sideways through that. So I always do that there, right? If I've got sideways consolidation, because I still don't have a breakout, so to speak, right? But it gets to the point where it moves sideways so much that it's like, wow, I might as well just wait for it to break this trend line or to break above or horizontal support or resistance level, right? Before it really catches my attention. You know,
Okay.
like that. And then sometimes if you're looking at a time frame like we're on the 1 and you think that you may have a better opportunity, this is not the best example because it's moving sideways, but sometimes it'll look like it's super narrow on this particular time frame. But if you want it tighter and more aggressive, sometimes it just requires you to drop down to a lower time frame, maybe to 15, and that inner trend line will fit in there just fine, and it'll actually look right for you. So
Okay, thanks.
you're welcome. You're welcome. And then sometimes, right, people think, well, if I let it get away and it breaks, then the trade may get away from me. But we just have to always remember that, you know, price always likes to pull back, right? So it'll move. Okay. It'll make its move, say it breaks. Well, typically a lot of times there's an ABCD wave prior to that break. So ABCD, boom, it broke. Well, guess what? Once it finishes out and it is meant to go in this direction, right? Eventually, right? Our C becomes our new A, our D becomes our new B, and then you're gonna get a new fib on the other side of that trend line now. So now the game is like this. It pulls back, okay? If you get that, then, all right, I still can put myself in a good risk to reward because I understand how the fibs run, right? I understand how they run and how to use, right, the fib in this manner. Okay, I'm gonna show you 2 different ways. So, boom. Now I can put my stop below the A, right? So look, got tool out, and we go, right, look, A, B, C, D, right? So now my C becomes my new A, that's my new boundary, boom. And then my D becomes my new B. I'm looking for my C, and so on, right? So now I don't have to have my stop way down here. I can move it up here below my new A, right? See, but sometimes it's hard and people be like, oh my goodness, it's absurd to put your stop below the A, it's so wide. Well, I understand that if, right, you were taught to draw your fibs this way. Boop, right? From the low to the extreme high, right? From the low to the extreme high, okay? Then it's like, oh, well, that's super wide. So I put it below my C, which is fine too, okay? I'll wait for, right, price to form a low, and then I'll get long off my C and put my stop, right, nice and tight. You could do that, but yeah, that doesn't look right when you're taught to pull it from the extreme low to the extreme high, because really what this represents at that point is a 4-hour fib. It's a 4-hour fib. Your 1 hour is the smaller, your 1 hour is the smaller wave, right? So again, it's just once you get to spatial intelligence, you see that, right? So this is here, boom, right? ABCD wave, because it's the smaller wave. And then once that finishes out, boom. Your 4-hour fib, right? Your larger time frame fib, 4-hour daily, would look like this. It overlaps that because it's a larger wave on a higher time frame. But that's not, so you could take advantage of all of this in between, right? So sometimes you'll see people that'll say, well, this, right, is the impulse leg. So this is my fib. Anybody ever seen that? Drop me a 2 in the chat. All right. Okay. So here you can see the magic in what we do, because that's what your daily or your 4-hour fib would, your daily most likely fib would look like for this price action, for this impulse leg, right? But if I'm a reversal trader, this is hindsight, right? Oops. Because I want this. I want this. I don't want to see this after the fact. Everybody follow me? That's the difference, right? And so I know some of you in the group that you probably haven't put it together, like to put it together what the difference is. Like the fib is the fib, right? Some people say, right, the fibs don't work. It's all subjective. But it's really not, right? So that's 531 pips of price action. This is just jumping on your chart and saying there's an impulse leg, right? So then you're stuck in a situation, right? Pay close attention, everybody, because this is the magic behind what we do. So now it's like, anybody out here ever used a scanner, like a harmonic scanner? Any type of scanner, they have them all over the place, right? You can, all over the place, like you can get them, right? Reach IML, yep. And you notice how people get mad, like, it just repaints. It keeps repainting the pattern. You know why? Because if price continues lower, it just keeps expanding. And now your price targets have changed. Everybody see that? If this method, if this pushes lower, boom, your fib is gonna. So where does it stop? So no wonder everybody says it doesn't work or the fib is subjective. Just like the people say trend lines are subjective. No, there's a proper way to do it. All right. So this is why, because it's just gonna keep expanding until, right, the pattern based on the measurement invalidates itself. And then it'll disappear and it'll flip, because it'll say you were supposed to buy here. And then it'll say buy here. And then it'll say forget it. Right? It'll say forget it. And it'll tell you to sell. It'll give you another pattern. Okay. With your fib drawn, all of a sudden it'll flip like this. It'll flip to a new pattern, and it'll be like something like this. It'll flip it, boom. And it'll be like, all of a sudden you go back and it'll be like, sell. And it's like, yeah, I already been stopped out 12 times, right? So the unique thing is with this, and knowing how to draw your fibs and understanding swing highs and swing lows and how the sequence works, is with this method, your AB boundary is always concrete. It doesn't float. It doesn't float. It's either gonna react at the B boundary, okay, and push up, okay, and it's gonna push up to a zone and it's gonna continue its trend, right? Or it's gonna push up and push through the zone and take out the A. And you got a potential trend change there, boom. And you draw your fib the other way, but when you draw this fib the other way, it's concrete. The only thing that's ever gonna float is your C and your D, right? Now, if you do still use a scanner, you can use it even more effectively now because you have an understanding of why it does what it does. It's not a glitch. It's not. It's the way it's designed. Okay, it's not a glitch. It's not bad. That's just the way it uses the sequence and the algorithm. Right. So all of this, right? When you're using something like that, and you get X to A to B, C, like that, boom, right? Right. Look at what you all are learning here in the inner circle. It's no different. A, B, C, D. Buy at the D. See, that's why even here on this drawing, if you move this out of the way and look, what is it giving you? It's giving you a 38.2 target, a 50%, and a 61.8 target. Right? Isn't that what we give you? Now look, here, see where the stop is? Okay? Look at where the stop is. They're putting a stop there. Now, here, okay? Look at where the stop is. They got the stop at the 118, 127 zone, where price is primed to potentially reverse, right? Now look, if this trade keeps running, see how it's a bat? Now it's a butterfly. Now it's a butterfly, could be a shark, could be a max butterfly. Now it's a crab. What? Now it's just nothing. It's invalid. See? Boom. But look. A, B, C, D. All harmonic patterns are derived from the Fibonacci sequence and the measurements, right? You see this X to A? It has to fit a certain ratio. X to A, right? See how that pulled back to the 61.8? That's part of what makes it a Gartley. See how this B to C? See how that B to C comes in a certain ratio, 786 to 86? That's part of what makes it a Gartley, potentially, right? And then you've got your potential extension point from there that it runs into. That's it, right? You guys learn a lot more than you think you are. Okay, so but right here, right? AB equals CD. This is what we're teaching you. That's why this is an opportunity. See? Without the pattern. Our C becomes our A, our D becomes our B. All right? That's it. Denise, question.
Yes, thank you.
Mhm.
Benny, I've been listening to you for a while and it's starting to click. I appreciate that. But I am still struggling with a very basic concept. I don't understand why we're doing a top-down analysis. Is that primarily for confirmation? And then I'm asking because you said something a few minutes ago about determining what time frame we'd like to trade on. And is that based on our tolerance after we do the top-down analysis?
Correct. And you know the type of trader that you discover that you are, right? And sometimes that evolves around your lifestyle, right? And what you have time for. Like some people don't have time to be sitting in front of a 1 minute chart or a 5 minute chart, you know. And then some people don't have the patience to let a 4 hour C to D move run because they don't like seeing their money go in and out of profit.
Okay.
Right. So they don't like if it's a 4 hour move and boom, it comes into a level that I want to take. All right. When this goes and makes this C to D move, right? Say to that 1.618, right? It's not going to go in a straight line. It's going to go like this. So this means you're going to see your money go into profit. Then you're going to see, depending on where you enter, either go out of profit or reduce profit. Then it's going to go back into profit. Some people psychologically just can't do it, right? So they like to be in and out. Okay. So if this is a 4 hour wave, so if I'm on my higher time frame and say on my 4 hour, I'm like, oh, this is at a U-turn point. I think price is gonna get bullish. All right. I don't want to take it off my 4 hour leg. So this is, say example, this is my 4 hour A, B, C. I'm in a C. And then price reverses. Okay. I might, knowing that, because I understand the sequence, that yeah, there's a ton of buying potential here, right? For over 1,000 pips, but I can't take and get it. I know that if it's gonna go 1,000 pips on my lower time frame, it's just gonna do it in smaller waves. See that? Right? So if this is my 4 hour, this could be my 15 minute chart. Okay. So what I'm going to do is I'm going to trade these on my 15 minute like this because I've determined off my 4 hour what my direction is and where price is headed, right? I've got an idea. So I'm just going to go down to my lower time frame, my 15, my 1, whatever I can handle, and I'm going to be in and out. So A, B, C, I enter at my C, boom, I'm out at the D, right? So say this trade here, say I came in at this level, say it gave me my pullback 61.8 like that. Oh, that's my sweet spot. On my 15, I looked at my higher time frames. This USD CAD is bullish. Okay, that's what top-down analysis helps us to do our best to determine. Okay, is oh, this is bullish. Not only that, when this pulled back, this just held not only at my 61.8, but it also held at a daily support level that I marked down from my top-down analysis, right? So that's why that's important, because there's more data per candle, right? There's a lot more data in the price action on your higher time frame charts. Why? Because one candle is 24 hours, right? So one 1 hour, that takes 24 1 hour candles. So that's more, is looked as being as potentially more solid, a more solid level that price may respect and may hold, right? The big boys, higher time frame, this daily level, this is where price may react. That level may hold, okay? A lot stronger than maybe a 15-minute level or a 1 hour level. Okay, you follow me?
Yes, my mouth is hanging open. Thank you so much. Yes.
You're welcome. You're welcome. So now I'm like, wow, I'm looking at potential over the long term, 1,000 pips of bond potential. So my bias from my top-down analysis is long dollar CAD, right? So now it just comes to my trade plan. Well, what do I like to trade? Well, if I'm trading with the trend, higher highs, higher lows, higher highs, higher lows, I like for price to pull back to at least a 61.8. Deep pullback. Why? Not because it's magical, because I like to put my stop below my A. It gives me a deep level. It keeps my stop out of the way, and my risk to reward is favorable there, right? What I mean by risk to reward is my distance from that 61.8 to my stop is 123, but to my TP level on this smaller fib is 354, all right? Almost, I didn't do the math enough, but say that was a 3-to-1. That means if I find enough of those, I only have to win 3 out of 10 trades to make money. I only had to win all of them. 3 out of 10. I'm like a baseball player. I bat 300. Might be a Hall of Famer one day if I could do it consistently, right? You get what I'm saying? So
Yes.
that's why we like that deep correction. And then especially if we get it in line with structure, like, oh, that's just an extra confirmation point, right? Like, not only did it pull back to my level, but because I brought my levels all the way down to my 15-minute chart that I like to trade on, that I have a tolerance for, oh, that I have to pay attention to this. Right? This is what my trade plan calls for. And maybe my trade plan calls for, once it does all that, I need a trend line break, right? Okay, boom. Wow, if it forms a low there and I get a trend line break, I'm taking it. And I'm in this trade. Just like that, boom, on my 15-minute chart. Now, when this trade hits to take profit on the 15-minute fib, okay, bang, I'm out. I know there's 1,000 pips of buying potential based on the higher time frame move, but I'm out. I've made 300 some pips. I'm gone. You know what I'm gonna do? When it hits the D, guess what? It's gonna form a new AB boundary eventually. It's gonna form a high. My old C becomes my new A or whatnot. My D, once it forms a swing high, becomes my new B. And you know what I needed to do? I needed to pull back to my sweet spots based on my trade plan. And if it does it, I'll take the trade. If it doesn't, like right here, see how that slightly pulled back in this diagram?
Yes.
Well, if my trade plan doesn't allow for me to take that trade off of a 236, then I have to let that trade go. I have to stay disciplined. But if the next one comes down in my zone, you better believe it, I'm in there, right? Now, is it perfect like this all the time? Nope. It's gonna get whipped around. There's sometimes where it's gonna make a deeper correction. Say on a higher time frame, it makes a deeper correction and it'll take this fib out. And he's like, well, I got my stop. That's a losing trade, right? I'm still net positive. I made 368 pips here. Okay, I lost 75. I lost 100 pips here. I'm still positive 200 some pips, right? That's how the game goes. That's how the game goes. But that's why you work hard, you get the basics down, you formulate your trade plan, and then you constantly tweak it, You know, you're gonna lose money, and then eventually you'll get to the point where you stop losing money over time, and then you finally get to break even. And it's like, oh, I think I can do this. And then you just gradually move into becoming consistently profitable.
All right. Thank you so much.
You're welcome. You're welcome. Any other questions? The hardest thing, go ahead. I'm sorry. Go ahead.
Yeah, just a quick question regarding the harmonic scanners. I just want to know what are they, and possibly is it okay to show or use that on the chart for me to have a look at it?
Yeah, so you could do, you could find like patterns, right? So it depends on what plan you have. Like they have like smart patterns, and what it does, okay, is that, right? If you, what was I just on? One, right? It's gonna find all types of harmonic patterns through here, right? So if you have it on TradingView, wherever you have it, it's gonna, most people that trade harmonic patterns, they use the software to try to find it for them, right? The key is you have to still know how to trade it, right? And that's, you're in this group. If you understand the ABCD waves, you're gonna find it. So it'll scan, right? There's things that'll scan, right? Where's my XABCD tool? It'll say, okay, this is a cipher pattern right there. And it's going to tell you, right? So this is this would be a bullish cipher pattern. And it's going to tell you, this is where you, right here, see on this link? And they're all different, right? This is just a manual drawing. So this is going to tell you, like, it identified a possible U-turn, right? A possible U-turn point. But it's no different. I'm going to tell you right now what's more accurate. What's more accurate is you finding an impulse leg on your fib and drawing it just like that. All right. So it may cause something, right? Like, oh, here, right? Which is nothing, right? There, like that. But you already have that. You see what I'm saying?
Yes.
Right. You see what I mean? And there's certain ratios, right? I just drew that. There's certain specific harmonic ratios that create, right, these patterns, all right, that developers spent a lot of time on. But you just came to the same conclusion without the triangles. That's why I love the smart fib so much. Because this thing will float. See that? And it'll invalidate itself. This pushes down and it kills the ratio or the price action moving down. It's gonna see that? You see how that's floating 93, 91, and then it'll invalidate. Well, it's like, no, like this is boom, right here. I know this. If this hit this area, this is an 80-20 zone. And you're looking to do what? Buy the correction. Right? Buy the correction. And it's gonna give you the same, it's gonna give you the target, right? Which your smart fib is more accurate. Because it's not gonna float. It's gonna give you the same targets: TP1, TP2, TP3. Some type of scanners use the 50%, some people don't, because the 50% is not really a Fibonacci number, right? In the sequence, it was added to the tool by whoever, I don't know. But this is it. It's the same scenario. It's either gonna reverse off the B boundary, or it's gonna reverse off that 118, 127, or it's gonna shoot to the D extension with no correction at all. So in essence, you already know how to do it.
Thank you.
You're welcome. But that's it's the same concept. Right? Denise, what's that emoji mean?
Oh, just your triangles and all your patterns. It's too much.
It is too much. So just drop the fib. Just drop the smart fib. There you go.
That's what I said.
Yeah, there it is. Right. That's it. Right. Those patterns are derived from that anyway.
I see.
Right. So just you already know it.
Yes, I think I just prefer to stick to the fibs.
Yeah. You guys are already running into the similar type setups.
All right. Very good.
So when we put it out, right?
Thank you.
You're welcome. You got two options. Right? There's an option here at the B boundary for reversing. There's an option here at the 118, 127 zone for reversal. If you do your top-down analysis and you feel like, hey, I think this has more bearish potential, then you just wait for a high price in the zone, and then you look to get short. And you put your stop above the A. Like so. Boop. Or above the C. Once it forms a swing high, you put it above the C. However you want to do it. Right? That's it. That's literally it. Try to determine your direction of the trend. Right? Do your top-down analysis, mark your levels so you know where price may react based off of those higher time frame levels. Like right here. If you said, you know what? No. Okay. All right. So what's cool about marking higher time frame levels is oftentimes you would see why price decided to make the U-turn because maybe it ran into a daily level of resistance or a weekly level of resistance, right? So you may track that and you may say, you know what? When price is down here, that's where if I look left, right, there's a supply zone there where last time there was a huge sell-off. So I'm gonna wait for it to work its way back up to this level. And then I'm gonna wait for a trend line break. Like so. Does everybody see that? Right, look, nothing. Just trend lines, support resistance. Can everybody see that their price reversed at this level? Yes or yes? Somebody, please tell me.
Yes.
Okay, so you may, thank you. So you may say, bang. So you might have been watching this, right? And this is why we mark support and resistance levels from the higher time frame. You may say, right, I'm a patient trader. You may look left, way back in the past, right? I don't know about this example, but I just threw that level up there. And you may look left in the past, and you may say, wow, the last time price reached this level, it collapsed, right? It just collapsed, right? To the downside. So you're looking at price here, right? And you may identify that. And you may say, you know what? When price gets back to that level, I'm gonna look for the same thing that happened. It's a pattern-driven market. And if it forms a swing high and it presses down, I'm gonna draw a trend line. And if it breaks this trend line, I'm gonna look to get in the trade. But you know what? I'm gonna let it break the trend line and I'm gonna let it pull back. Right? Because I like using my fibs to measure. Okay. Boom. Right. Broke the trend line. Okay. It was the first opportunity in this area, but look. See that break and how that pulled back? Stop above this A here. I'm gonna let the trade do what it's gonna do. Because I looked left and the last time it reacted to this level, it collapsed. So that's what I'm gonna be waiting on. Whether it takes 2 days, 3 days, a week, I'm just gonna scroll through. Has the EuroCAD reached that level yet? Nope. Okay, I'm gonna keep it moving. All right. But when it breaks and it pulls back, if this is my trade plan and it reaches my level, 61.8, okay, 61.8, 786, right? Those are the levels that I love when I'm trend trading. Nice high pullback. I'm gonna get in this trade and I'm gonna take it to the respective extension. which it finished just a little bit shy of that 786. So that's a 61.8. I expected 1.618, the extension. This is my trade idea. And my risk to reward, if I say I want to take it out to 61.8, 159 pips, my reward is 486. That's my play. Boom. I'm taking it to the downside with the trend. Okay. So if we come out and we look at like this level, see that there? If I have, this is my weekly level. This is another weekly level. If I come down to my daily, right? Let's just take this off. Take it off. See that? See how that reacted? Well, when it got back up to this weekly level here, see how I came into this level? Came up here and it stalled. Well, you know what I'm gonna do? When it gets to that level, I'm gonna go down to my lower time frame and I'm gonna start drawing trend lines. And I'm gonna see if I can catch that reversal. You know what it's gonna do? I'm gonna take my waves all the way down. A, B, C, D. Right? That's why we draw higher time frame support and resistance, and we work our way down. See? Okay. Stochastics in the buy zone. We get this to wave back up, either retest this level. So now we're saying, hey, if this breaks back above 135, right? Boom. And it retests, boom. And it forms that low, right? Okay. We start to get that low to form. And that holds above 135, then it may be ready to continue to get long, right? Boom. See? If it pushes up to this level to retest, because the market moves in waves, boom. And we see it start to do what? Form a swing high. Then this price may have some more downside potential, right? If it stalls here and pushes back up the test, it's going to form a swing low there, right in this zone. Past resistance becoming future support. So it's going to form a low there. And that's going to create on a daily time frame a new level. So if it comes back up and it holds at this 135 and it wants to move back down, first it's going to have to revisit is the new level that it created. Bang. And it's the same stuff over and over again. And when you put a fib on it, all you're doing is measuring that exact price action and trying to make a determination of over the long term where it may go. But this is the game, right? This is the game. Okay. And you think ahead, past levels, where may it find some trouble? Well, it might come here, right? And form that low and try to retest 135 and get beyond it. If not, turn back over, right? Because now what was support at 135 finally broke, and when it comes back, it's going to test 135 as what? Somebody tell me.
The question again.
Resistance?
Correct. So the question was, it broke below 135, which was support. If it comes back up to retest it, it's going to test it as resistance. Great answer. Okay. That's it. Look at it. This is it. So that's why we start you out foundationally. Mark your support and resistance from the top down. Right? Mark it from the top down. Oops. We can't say it enough. Don't skip the step. Oops. All right, clear this off. All right. Do we have a swing low here yet, everybody? Somebody tell me.
No.
Nope.
No. What do I need to see happen?
Two candles to the left and two candles to the right.
Right. That are higher than this center wick low.
Yeah, you need two more to the right higher, correct?
Right. So it could be bullish or bearish, but if this is going to hold as the low, you need two more. So right now we're in the new day Asian session. Right. So what is this? It's a new day. What's the day? Tuesday. So this is Wednesday. Then you need a Thursday to close out for this to establish a new level of support. Okay. So when you're in the lower time frames and you're taking advantage of those early moves, right? See if it can all come together inside your mind, right? Spatial intelligence. So if we're taking advantage of, 80/20s and things like that on the lower time frames, what it's doing is putting you in these setups early, right? Because while we do our technical analysis from the top down in regards to support and resistance, those building blocks for this potential swing low are going to start on your lower time frames. Why? Because those are the 1 hour, the 15-minute, right? So we know on a daily, it's going to take 24 1-hour candles just to establish this daily candle, right? So you're already involved in it. You're down on the 1 hour. You're like, man, I just found this 80/20, or I'm trying to play this swing. You see how this is just moving sideways, right? So look, this is the 5-minute, okay? This is the 5-minute. I'm going to clear this out. This is the 5-minute. This is your daily candle overlay. This is what's going on inside of your daily candles on the 5-minute chart. Okay, here's your 15-minute. Right? You see how it's trying to form? See how it's trying to create those blocks to form that support? Right? So we don't have it yet, right? We don't have that daily support form yet. Why? We've got, here's our low. Here's our center candle low. Here's two to the left. Here's our first one to the right that's trying to form, right? All right. So what we're teaching you is how, man, this is why you can get into some of these positions, right? 80/20s and that, and then they react, and you're like, this trade is running forever, because it eventually has the possibility of forming support on a higher time frame, and then just running, right? So it's building up now. And then what'll start to happen, if this is going to hold and you get buyers at this level, right? You're going to see these candles start moving up and forming like this, right? And you're on your lower time frame, like, wow, what is going on? Like, And it's like, man, that was, okay, back to the sport, that was a 200 pip move. And you look at it and you wonder, like, man, I was in that so early, right? Right. That's why you hear some people in the group and they'll be like, well, I entered this as such and such. And you put it on the chart and you're like, whoa, you were already in it. And now it's just running, right? So you can literally sit on your, right? You guys still hanging in there with me? Yeah, we still pretty much got
Yes.
everybody. Okay, I know I'm running. So
Yeah.
look, you can literally sit, okay, on these charts and come into these levels. And you can look and watch on a daily, right? If you're a daily chart trader, you can watch price come into these levels and see if they hold and put your stop underneath that level that forms. Is it a wider stop? Is it a larger move? Will you trade smaller? Yes. But once you get here, boom, okay? Boom, okay? That's an established swing low. Maybe you want to try to take that for the ride, right? But what you know, what's going to happen is while this is moving like this on your daily, your lower chart price action is moving like this. That's what it looks like, right? As these candles form and that swing starts to happen, it's going to make, because if it gets long off this support, it's going to make up ABCDs. So when you're down on your lower time frame, right? This has been, right, 634 pip move to the downside. So on your lower time frames, it's already been doing this within these candles right here, right? Big move, took out some A's on the lower time frame, and then look, that happens. You can't control price action. So on your lower time frame, you're like this. Wow, if that forms, right? If you wanted to trade this off your lower time frame, if this forms support at this level, I've identified it from the top down, right? I could go down to my lower time frames on my 1, my 15, whatever, and say, oh, I'm gonna get ready for this, right? Because it's already starting to build on your lower time frames, right? So if you go here and you look now, right, you've already got a 4-hour support. Why? Because it's a lower time frame. Look, it's already forming a 4-hour support there. It happens in stages, fractals. Each time frame, each lower time frame is a smaller representation of the higher time frame, of this higher time frame brother or sister, right? So you can see you got it forming here. You've already got it forming here. Look, you already have support levels forming on your lower time frames. You just needed to start forming on the big boys, right? It's building up to that, the big boy levels. Okay. And you could play that like, I'm gonna target 135 again. Boom, maybe it works its way back up to 135. Sometimes it forms and then it just corrects back to the downside. You lose that trade. It is what it is. But this is why we urge people, right? Hey, go through and mark up all your currency pairs, top down. Pick 4 charts, right? If you want to. Monthly, daily, 4-hour, 1 hour, weekly, daily, 4-hour, 1 hour, or 15-minute. Okay, so you can see everything that we just talked about tonight. Okay, see it for yourself. That's independence. You don't want to be dependent on us, right? We retire tomorrow. What you gonna do? Do this yourself. Do this yourself. Otherwise, you're gonna be paying somebody to trade your money in the 401k or whatever it is and tell you to wait 40 years, right? That's not why you're here. But that's that. What questions do we have?
That was great, Benny. Thank you so much.
Oh, you're welcome. I appreciate it. Right? we're here to help, right? So we appreciate when you guys ask the questions. You can see it all through the charts. Look, swing high, swing low, swing high, swing high, swing low, right? Okay. Okay. The key is to be able to use your top-down analysis, support and resistance, and be able to, you know, and you can use your fibs to help you with that confirmation to pinpoint, this is an 80-20. This might be an area where price may be ready to reverse, right? Because you can see them all throughout the charts, but all of them aren't equal, right? All of them aren't equal in regards to their reaction. Okay, but you see it, it's there, right? If you need to practice and you need a visual, just put your fractals on, okay? Right? If you just want to see swing highs and swing lows in action, look, see how that held right at that level? Right? See how that came down and how that held? Created that level? That's just the nuts and bolts of trading. Right? Look at that reaction. Don't look like much off that monthly level. Right? Doesn't look like much. It's 100 pips. Okay. Okay. All right. Any other questions?
At this point, all I can say is what you guys have said, yourself and Benny. Repetition is the mother of all success.
Mm-hmm.
And I've looked at this, and I'm going through the course myself right now. And I don't think you can explain this any more simple, because that was just, I understood everything.
Thank you. I appreciate
Yes,
it.
yes.
Thank you.
It's a thing of I just right now in my trading now, literally it's just about keep on going over it over and over again and applying it, because applying is a totally different thing when you come to yourself and you're just sitting out in front of the charts. But this right here, this is golden. This is why I've literally had to wake up 2 o'clock just to get into this lesson, because this is so valuable.
Well, appreciate you being here. Thank you so much. Thank you so much for the sacrifice. That's early.
That's earlier. When this kind of talks are involved and this breakdown of the charts is involved, it's worth the sacrifice.
Appreciate it. Thanks for being a member. Right? Somebody taught us like this. So we're just passing it along. That's all we're doing. That's it. Everybody can eat, right? Abundance mindset.
Thank you for sharing. Yeah.
You're welcome. Ryan, anything to add before we wrap it up?
Man, nothing can follow that, bro. Phenomenal session, phenomenal breakdown. Greatly appreciate you doing that.
Appreciate it. Thank you, sir. Thank you, sir. So one more I wanted to look at was this, right? So this is one that I'm keeping my eye on, right? This Euro USD that's just coming into this zone, right? You see how it's working out right there, it's still putting that pressure, but it's like, okay, it's pushing. See how it tapped that 61.8. So now it's like, see how this 103, it broke it, but you see how it can't close beyond it. So that's why I put that on the radar, right? Somewhere in this zone, and see how it wicked out. It's pushing, it's trying to get there, right? But look how I thought for it today. It's like, man, it's got some momentum. It's going to move up to that zone, right? So I drew it like this. But you see how it closed right back below this 103.74 level? You see how it has formed a swing high here at this level before? And then it dropped off. So you just start to wonder in your head, like, you know what? I've got to put that on my radar, right? Because I may start to see some of these things break down, right? So there's a zoomed in look at the 4. And you can see how with these sub fibs running to the upside, right? That's how price action got there. It's starting to pause a little bit. So that kind of sets off my alarms a little bit to like, you know what? Focus in on this to see if potentially this is ready to start on the decline. As in my head, I'm long-term bullish on the dollar, bearish on the euro with everything that's going on, right? And that's all you can do is put yourself in a position to potentially set yourself up for a profitable trade, right? But that's just an example of how those building blocks can kind of start. Now, this is either going to maintain itself as the high, or within these candles or so, it's going to push up and take that out. And it's going to keep moving to the zone, right? Ultimately, it'll be beautiful here at 106.21 in this zone up against that trend line. But we'll continue to watch it. As you can see, the momentum is starting to slow to the upside as it's overbought right now. So just continue to keep an eye on the Euro USD. Trade small, keep doing the work, keep putting in the work, keep showing up for yourself, as Ryan always says. And we will see everybody who can make it 6:30 a.m. Eastern Standard Time for the pre-New York session. Thanks, everybody. Appreciate you hanging in. I know we went over a bit.
Yeah, man. Thank you very much, man. Appreciate that. And keep
You're
showing up
welcome.
for yourself is the motto. I like that.
Thanks, Benny.
That's it. You're welcome. Have a good night,